Hello and welcome. Thank you for joining us on Business Incorporated, coming to you live from Lagos. I'm Chibize Obi Iwago. Coming up on the program, MTN, Africa's biggest mobile phone operator, cuts investor payouts by almost 50%, reports its first ever half-yearly loss after taking a hit from a hefty regulatory fine in Nigeria. The Republic of Congo's $2,029 bond tumbles to record lows after the country missed a payment on its only international issue. Plus, Morocco's jobless rate falls to 8.6% in the second quarter of this year from 8.7% in the same period last year. Well, we'll begin in the UK, where the Bank of England Deputy Governor Ben Broadbent says there could be a further interest rate cut this year if needed. His comments highlight the Bank of England's signal on Thursday that rates could go lower if the economy worsens. On Thursday, the bank cut interest rates from 0.5% to 0.25%, a record low and the first cut since 2009. The bank also attempted to boost the economy with a £100 billion scheme to force banks to pass on the low interest rate to households and businesses, and the purchase of £60 billion of UK government bonds and £10 billion of corporate bonds. The Royal Bank of Scotland has reported a £2 billion loss for the first 6 months of the year, which the chief executive blamed on legacy issues. It compares to a £179 million loss. £179 million loss last year, and includes £1.3 billion of litigation and conduct costs. RBS also confirmed that it will no longer separate and list its Williams and Glyn business. It will now sell the 300-branch high street bank, with Santander UK understood to be a potential buyer. Now it's the last trading day for the global markets, and markets are still digesting Bank of England's fresh stimulus package. Of course, U.S. job data is being expected today. Let's now cross over to Frankfurt. DWTV Channels TV financial correspondent Annette Wisberg is ready to tell us what the expectations are out there at the markets. Good afternoon, Annette. Now, the U.S. jobs data is being expected today. What are the expectations and the likely impact on the market?
Well, we have just those data just came out like a minute ago, and they were a lot better than people had expected. Now, for the month of July, 255,000 jobs were added to the U.S. economy. Expected were some 180,000 jobs. You see that in the back behind me on the big billboard. Even the DAX here in Frankfurt jumped upwards quite a bit on that positive news. That also means that U.S. economy is doing better than people had expected previously. There's a lot of uncertainty surrounding the state of the U.S. economy. Some people are downplaying it. Some people are saying they're doing better than expected down there. Well, bottom line is that the numbers are stellar, which we have now, and that also means that the Fed actually might raise its rates a little bit earlier than previously expected. That's what people are thinking immediately about when having those good numbers from the job market. But that also means that the job market actually is getting closer to natural employment. Goldman Sachs earlier this year came out with a study saying, I said actually on Friday, that they expect the labor market to reach full employment by early 2017, and the better the numbers, the earlier that full employment status is actually going to be reached.
Now, Annette, let's look at some of the earnings that have come in now. We have Royal Bank of Scotland. Of course, that bank is reporting a £2 billion loss for the first 6 months of the year, and the management is blaming it on what it called legacy issues. Talking about legacy issues, they say it include mis-selling payment protection insurance to customers, and litigation related to a £12 billion right issues in 2008. That was during the financial crisis. What are the shareholders saying about this?
Well, they're selling the stock. RBS shares were down 5% and more during today's trading session, because that, again, was a negative surprise for shareholders there. I mean, the bank anyway is in restructuring mode. They are halfway through a 5-year restructuring process. But now the CEO is saying that there needs to be done more, and they'll update the market with more job cuts, probably at least cost cuts in the first quarter of next year. And they're also saying that they're going to not pay any dividend at least until 2018, because they don't see any improvement very soon for their bank earnings. That is actually mirroring something we've heard from other European banks during the course of this week, that the low interest rate environment is weighing on their earnings, that regulation is a burden to them. And of course, for UK banks, the speciality is that nobody really knows what the Brexit vote will mean for them, because of course UK banks are so much dependent on something which is called EU passporting rights, that in fact only if the banks in the UK have access to the European market, they can also do business here. If they are losing that because Britain has voted to leave the European Union, it will be very difficult for them to do business.
Now, Anna, just before I let you go, quite a lot happened on the market this week. Could you give us the summary of this week's tradings and, of course, an outlook for next week?
Of course I can. I mean, that whole week was dominated by banking shares, I guess. I mean, we started off with a digestion of what the stress test result meant for banking stocks. We saw a big sell-off again in Italian banking stock, but also German banks did not very well. But then we had a little rebound on Wednesday after French banks actually came out with earnings which were better than expected, showing that there is still a possibility of doing business also as a bank and being profitable with it. We can't really say that about German banks, but they have a very homegrown problem, which means low profitability. Commerzbank, for example, reached a new record low. Also Deutsche Bank shares touched a new record low. So these banks are really not out of the doldrums yet. At the same time, another highlight, of course, was the Bank of England's package, which was bigger than market had expected, with the new round of asset purchase program, corporate bond program, and also a new funding for lending scheme in order to make the banks also give the loans cheap to private customers. And also Marcani saying that most likely there will be more action needed from the Bank of England, and that they can enlarge every of these programs even further. I think that was the biggest message from yesterday's Bank of England meeting. Next week probably will be a little bit calmer here on the markets. We are looking for the end of the earnings season. German utilities still will report. Other German big corporates like Deutsche Telekom will report. And we get a first update on how economic activity fared in Germany during the second quarter, with preliminary GDP numbers coming out.
Well, thank you very much, Arnett. We will look out for a better week next week. Thank you very much for your time, Annette Wisbert, DWTV, Channels TV financial reporter there from Frankfurt Stock Exchange. And in Asia, shares in Japanese car maker Toyota have risen despite the company reporting a weak outlook for reports in the current year. On Thursday, Toyota reported a 15% drop in its first quarter net profit, with a strong yen weighing down the company's exports. Overall, Japan's Nikkei 225 index finished flat at 16,254.45, Elsewhere in Asia, stocks were higher. In South Korea, the country's benchmark Kospi rose 0.9%. Australia's ASX 200 index closed 0.4% higher. In China, the mainland benchmark Shanghai Composite closed down 0.2%, while in Hong Kong, the Hang Seng climbed 1.4%. Well, we'll take a quick break now, and when we return, MTN posts losses and blames regulatory fine in Nigeria. Details in a moment.